So my name's Andrew Ward. I'm the founder and CEO of SelfWealth, and I'm joined on my right by probably the most important person in the business, the CTO, Andrew Dick, who manages our whole IT team. SelfWealth was really born out of frustration of overpriced advice and underperformance, and we have now created a community of thousands of investors that you can use to invest better. We really are a portfolio construction tool, and today we're going to jump into a live demo rather than use slides to really show you the power of the solution and what we're doing. There's been a lot of talk today about self-directed investing and self-managed super funds, and I suppose the catalyst for me resigning from my previous role, which was running a portion of the private bank for the CBA, was chatting to the CEO of a company called BGL. And BGL manages 75% of the self-managed super fund administration market in Australia. That gentleman's name is Ron Lesh. He basically wanted to come on board, seed our business, become a director, made sure we had exclusivity. He told me to resign within 2 weeks, which is difficult when you've got 3 kids and a mortgage. And that was a very interesting conversation with my wife in November. So I think we're actually 3 years and 3 days into the business now. All 4 things happened. So we actually have a relationship with BGL. So they've got around 400,000 of the 500,000 odd self-managed super funds. Pick your figure that comes through one of the dailies. And as they move through to their cloud-based solution, which is called Simple Fund 360, we are fully integrated into that with exclusivity. So our first upload with them is about 20 to 30,000 self-managed super funds in February, and there'll be 5 to 7,000 a month coming through after that. But let's get into the solution and talk about what SelfWealth is all about. So what you can see here, so we've got James Bond today. If we jump down to the bottom of the dashboard, what you can actually see here, first of all, is we're really a managed account solution. So what we're doing is turning higgledy-piggledy stocks at your broker back into a portfolio. So you can see a percentage weighting on the right-hand side there. But one of the great things we do as well is actually give you a valuation of the stock. We try to use a really simplistic version of that, a traffic light version of valuation, which is red, obviously green and yellow. And let's jump in, Andrew, into one of the stocks. This takes you into our research engine. Now, this is the only part of SelfWealth that isn't our own IP. We use a company out of Canada called Recognia. We were the second company in Australia to use Recognia. The first was Spelldirect. And I think they have quite a fair few new clients now. But in one page, you can see everything you need to know about a particular stock. The reason why we haven't created this ourselves, first of all, we don't have the expertise, do we, really? No? No. Is because we're dealing with the industry super funds as well as other retail funds who, for example, Australian Super use UBS. So we can't use our own research for that. We need to buy, hold, sell, and pick up the PDFs of those research funds for those relationships we're developing. Okay, so that's the bottom part of the dashboard. Actually, we've got other assets and liabilities. What we also do as well, we'll take this in from BGL, but we'll also take it in from, if you just find us on the net, we'll take your whole position into account. So we've got James Bond's got his Aston Martin. Is there a wine or art collection in there, I think? Yeah, investment property loans. We'll take your whole situation into account on one page for your dashboard. But the 2 big things we're getting a lot of interest about at the moment are the safety rating and the wealth check score. So we'll jump into the safety rating. And the safety rating, I suppose, is really measuring the diversification of your portfolio. There are 4 things the safety rating measures. How many stocks do you have? How many asset classes do you have? Are you too concentrated in one particular stock? So when you invest in ETFs or M funds, your safety rating improves. Let's jump into the wealth check score, because you really see the power of it then. Because the wealth check score is a score between F and an A+, and you'll see the second point there is the safety rating, which actually has quite a large weighting, 30% weighting to the wealth check score, to the safety rating. Gamification and financial services, they don't sound like they should go in the same sentence. Gaming and financial services doesn't sound right. But really, there is only one reason why a game works. Whether you're a kid, whether you're an adult, whether you're playing Monopoly, whether you're playing footy, there's only one reason why a game works. It's all about this concept of progress and moving from one place to another place. And there's only 3 reasons why a game works. What's my goal? What are the rules? And can you please give me some feedback? So we've developed the wealth check score around that concept. You can see there are 7 different components to the wealth check score, and it's all in your control to improve the wealth check score. So the valuation, so the performance at the top, that's not how you actually perform, it's how you're performing compared to the rest of the community. The safety rating we've just looked at before, and the rest of it's really around collaboration. There's a bit of valuation in there as well. And if you go up to the top to the social piece, in the social drop-down bar, in the community analytics, you can actually see as we go right down through this, and the data is really important for us. It actually works. The higher wealth check score you have, the better you do. The higher safety rating you have, the better you do. Females are better investors than males, and I think New South Wales is still winning the state of origin. It's pretty full on. This data is getting really, really exciting, and imagine when we upload the 20, 30, 40,000 that we'll upload in February, it just gets richer and richer and richer. But really, what we're doing is Harry Markovitz's 1952 modern portfolio theory. And it was mentioned earlier, I think Alistair mentioned it in his presentation earlier about, it's all about asset allocation. 90% of returns are driven by asset allocation rather than picking individual stocks. We're just playing that out in the community. Okay, so that's great, that's good, that's you. Let's go into the rest of the community. So we go to the ladders. We can start to go into measure all the people by their wealth check score, by a variety of other different metrics to see who are the best investors in not only Australia, but the rest of the world. We haven't gone to the rest of the world yet, but this is just Australia. But you can see up here, there are 3 questions you answer when you join SelfWealth. When are you going to retire? What's your performance preference? And what's your attitude towards risk? So we can actually dish up a portfolio based on a member like you. But what you can see there is, let's jump into Brabant. So it's all anonymous, so no one knows who anyone is. When you actually join, you put your username and upload an avatar if you wish to. The great thing you can see here is what are the stocks that Brabant is holding, and yet again all the weightings. So yet again, it's a pretty high wealth check score. Must be well diversified. Must have a few different asset classes in there. Might be a few M funds or ETFs. Now you can watch or follow. You can watch as many people as you like. It's like having your own watch list. You can only follow 7. And the reason why you can only follow 7 is because that forms what we call your target portfolio or your perfect portfolio, your nirvana portfolio. So here we go. If you don't follow anyone, your target portfolio is 100% weighted to yourself, that my portfolio at the top. But James Bond's gone in and followed Ron 1, a couple of iShares, Steady Eddie, High Tide, Ian Aspinall, he probably shouldn't have put his real name in there, and Brabant. And then you actually weight them. You can see down here, rather than weighting stocks in a portfolio, you actually weight the portfolios that you follow rather than the stocks. You can see down here as well, you can add cash or direct securities into that as well. So you don't necessarily just have to weight to certain portfolios. You can put in that specky mining stock that your friend told you about at the barbecue on the weekend. So let's jump up to the lighthouse. So the lighthouse shows you how everyone is trading, all the people that you're watching and following, and what they're doing. I mean, I use this a lot. The people that I'm watching and following, they're buying in and out of JB Hi-Fi, they're doing a variety of other things. So I use that that function quite a lot. So let's jump back to the dashboard. On the second tab, you can see the target portfolio. So we actually start measuring the performance of that target portfolio that you've just constructed yourself. First of all, you can see, the wealth check score's gone up. We know that 91.7% of the time, your target portfolio outperforms your own. It sort of has to, because it's just more diversified. You're following people with better wealth check scores, which is all based in economic theory and diversification, etc. We need to work out that CBA is held at, what's that? Yep, 4.46% of the portfolio, because the 7 people you're following hold CBA in certain weightings. Let's jump into the benchmarking. Take a 12-month view. So you can see here the target portfolio outperforms your own. So that's really quite important. That's what we really like to encourage, is the fact that following other people by using really solid economic metrics actually works. Go to the breakdown. Go to a combined view. So the outer part of the circle is your target portfolio, the inner part is your own. So it's no secret. There's no rocket science to this, how this works. It's just a matter of diversification and all the different stocks that are being held. So the final secret, final piece of the puzzle, if we go up to, you can see the rebalance piece up there. We'll actually then tell you what to buy and sell. How do you get your actual portfolio to your target portfolio? And something we'd like to announce today is we're launching our own brokerage solution called Fortify, which we launched in February, which will be half the price of any other brokerage solution in Australia. Now, I've tried to get to my iTunes and Spotify version of broking. So iTunes, you buy the song, Spotify, you rent it. I've wanted to get a broker to provide us a rentable brokerage solution, which we've got to. So SelfWealth, currently, if you find us on the net, is $19.95 a month. For $49.95 a month, you can get SelfWealth plus 5 unlimited trades. If you want to do more than that, that's $39.95 a trade. You don't use them, they carry over. So that's Fortify, which we're launching in the early part of next year. So that's very exciting for us. We're also in the position where we're going to float next year as well. There's a lot of interest for us overseas. We want to make sure we get it right here first. Obviously, the BGL piece is quite exciting for us. We'll have up to 200,000 to 300,000 members in the community within the space of the next 18 months. And they'll also be using Fortify as the brokerage solution as part of that. So that's us. So thank you very much for listening to us, and thank you yet again to AWI and the ASX for having us on here today.